Good morning, traders. Happy Friday and happy monthly OPEX as well as Triple Witch. This is Michael coming to you from Game Edge on September 19th, Friday. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend. To start off, obviously, there's been significant posts about Triple Witch, whatever the number is, trillion, billion options expiring today. So let's go through the SPX option structure. We know we have a structure that has to be navigated. Could be some volatility today. But at Game Edge, we prefer not to go down those rabbit holes of significant expiry because we know that there's a structure. It has to be navigated, and we can put our if-thens into place and use our trading plan to navigate the SPX structure for today. So let's jump right into it. You're looking at our market trend model. It is based on the tick index that is buying versus selling in the overall market. Orientation here, the bolded CT, that's the intraday instantaneous cumulative tick. Again, showing buying versus selling. At the end of the day yesterday, it was rising, so that was indicating more buying than selling. The breadth indicator, new highs versus new lows, new highs outpacing new lows, and then our plus 1,000, minus 1,000 filtered cumulative tick for larger institutional orders was rising to the upside. So institutions were accumulating yesterday. More stocks were being bought than sold, and then obviously the cumulative tick was above zero. So let's move on to our quality tick. Again, the bolded white CT, this cumulative tick, you want to see it above the moving averages. You want to see the moving averages moving to the upside from lower left to upper right. This was not as sensitive as the previous tick that we looked at, but it was rising in a positive direction. So we'll continue to monitor this. Really, you look for the past 3 to 4 days. We've really just been sideways, not making new highs on tick. So what we want to see is if SPX is making new highs, you want to see the tick index continue to make new highs, indicating that there's not a divergence, that there's more stocks being bought than sold. And our colored ribbon, which is our longer look back period, gives us our longer trend in the overall market. Red above cyan, so obviously indicating that market participants are still buying, and the market trend is still up at this time. And that's what you want to be, essentially, is just on the right side of the market. And that's what our market trend model helps you do, just be on the right side of the market. All right, moving on to the SPX structure or options complex. The SPX is the largest, most notional value via the options complex that we look at. We separate between the SPXA, obviously, which is the morning or early expiries, and the SPXP, which is the PM expiries. Institutions position in the SPXA. Over here via our web app, you'll notice that the tiles are turned on. The next expiry now is the October 17th expiry. Obviously, as the SPXA, it was just today the expiry rolls off. So again, call dominated via the structure. Net delta is green all the way up and down. We do see the transition fairly wide here. And you see the secondary, the GEX transition up here at 67.20, the DEX transition 65.95. So staying above the 6,600 level will be important for the bulls for opportunity to continue price appreciation to the upside. But the quick takeaway is that even after this options expiration, we are call dominated. So this will continue to be supportive as this structure is green, net delta indicating calls above and below spot price. We do see some out of the money puts coming in here below spot price. Again, this could just be early hedging, and we'll see if this overall structure fills in and changes after this expiration. But again, takeaway is call dominated, call speculators, and bulls are still in control of that structure. SPXP, this is our speedboats compared to our cruise ships with the SPXA. These contracts turn over much more rapidly, as you see by the 0DT tile here. And then you can click these on to look at the weeklies. Also, call dominated above and below spot price. The net delta column is extremely green. So again, supportive type action. We see 6,700 up here as PGEX and COI. So again, that's the upside target. Highest call open interest and local peak of call speculation that we'd look for to the upside. And then to the downside, we see the transition levels. Obviously, these would continue to be supportive on any pullback, as we've really said for the past few weeks. So really no takeaway here. And we see the JPM end of the month short call strike 65.05. It is not liquid and not really influential heading into today. Let's move on to the SPXP GEX ratio, or what we call gamma edge ratio. This is basically like a put call ratio, but we add a gamma component, which is a short dated time component. Obviously, this is indicating short dated call speculation versus put speculation. And as long as we're above 1, call speculators or bulls are still in overall control. And we see a positive slope in the GEX ratio. as SPXP was rising to the upside. So again, indicating short dated call gamma is overriding the short dated put gamma. Now, we did see a drop compared to the previous days. So we hit a local peak there of 2.2, and then we've been dropping ever since. And then we hit a low here of 1.1, and then now we're slightly rising back to the upside. So what you want to look for on this chart is divergences. If the SPXP is rising, but the GEX ratio is falling, then that is indicating that the out of the money call speculation or short dated call gamma or call speculation is continuing to drop as the spot price continues to rise. So that would not be conducive to continue to support price to the upside. And then consequently, if we see the spot price dropping, but the overall GEX ratio rising, that could be a turning point as the short dated call gamma is coming in versus short dated put gamma. So we'll continue to keep an eye on this. Again, as long as we're above 1, call speculators are maintaining overall control, but we could just see spot price oscillate back and forth. All right, moving on to what we call the delta balance. Again, interactive charts here at GameEdge. All of our charts are interactive and allow you to scroll over to look at individual strikes as well as the prices that are associated with those days. We're seeing a negative slope in the right-hand plane. We separate this from the right-hand plane and the left-hand plane. So right-hand plane is above spot price. That includes your out-of-the-money calls as well as in-the-money puts. Left-hand plane is the red dotted line. Those are your in-the-money calls below spot price, as well as your out-of-the-money put hedging. So we do see that out-of-the-money call speculation continue to drop. We really spoke about this since back here on the 12th. It continued to drop as we saw spot price continue to rise or continue to consolidate sideways. So again, the chance of a significant price appreciation above key levels overhead was continuing to drop. Yesterday, obviously 66.50, we pinned that pretty well, and we really couldn't get above that level as we continue to see the out of the money call speculation drop. Now, we do see the in the money calls below us continue to be maintained, so that's why we continue to say any pullback will be supportive. If this left-hand plane changes and we see it getting a negative slope, then that would indicate the in the money calls below us are starting to erode, and that would be out of the money put hedging. So then that would possibly lead to a larger pullback in the overall market, but we're really not seeing that. We see the delta balance slightly dropping with a negative slope here. So again, we could see some weakness into the monthly OPEX today, but we recover fairly quickly on into next week, as you see the 22nd here, and then on out in time, we see that right-hand plane continuing to rise. Again, out of the money call speculation driving back in. We do see a drop in those in the money calls or the left-hand plane, as well as some put hedging. Again, that could just be some short-term hedging heading into the new month or front month of October. But the delta balance is maintained at 1. So again, we give the benefit of the doubt to the bulls and the call speculators, as the call gamma, short-dated call gamma is much larger than the short-dated put gamma. And that's pretty much what we've seen. We've seen this continuing to diverge to the downside, the out-of-the-money call speculation dropping, but the in-the-money calls below us continue to be supportive and not much out-of-the-money put hedging. So as long as this doesn't change and we see a recovery in that right-hand plane, basically steady as she goes, and we'd anticipate the SPX to be supportive and possible price appreciation after this OPEX, unless we see a significant change in the overall delta balance. All right, let's move on to the SPXP net stack command high sensitivity levels for today. So again, we see in-the-money calls below us. We see those in the money puts at 6,700. So again, extreme supportive action. The left-hand plane, you see how large the integral is here compared to the right-hand plane, which are those in the money puts. Again, we talked about that with the delta balance. We saw that continue to drop. So the in the money puts were overriding those out of the money calls. So again, net charm here, 6,600. As long as we're above that level, those will continue to be supportive. 6,650 overhead. Key area out of the money calls, as long as we continue to stay below that level today, those will become a large headwind via charm as time passes today. And then we see the sensitivity levels for gamma. Obviously, if we get over 6650, that's why we're discussing the possibility to drive up towards 6670 pretty rapidly due to the gamma component there if we get up on that overall ledge. And then we see the gamma components if we see volatility drop. So we can look over those. All right, let's move on to the SPXP 0 DTE, and we'll get into our trading plan for today. Call dominated above and below spot price. Expected move really not large, 0.644 points. So again, drunken sailor range fairly wide and below the transition area. And we do have two transitions. Obviously, we have the GEX transition, which is the white or gray box, and then we have the DEX transition, which is the blue box. So it's significantly wider for today. That basically just indicates uncertainty in the overall positioning, and you see that here within the drunken sailor range. You see the net OI negative and then positive and then negative and positive. So again, uncertainty by market participants, basically where they should be positioning or placing their overall bets. So it's just a hodgepodge here, not necessarily a defined structure within the drunken sailor range. So that will lead to extreme choppy action between 65.80, 66.25, and will be driven by the intraday volumetrics. So that'd be mechanically opening and closing of contracts by market participants today. Above 66.25, again, pull back to these transition areas and top of drunken sailor range, we'd anticipate to be supportive. And then above 66.25, we'd be driving towards 66.50. And I think we were hovering around that level pre-market. Above 66.50, we'd be looking for 66.70. And then we have 66.80 up there with COTMC. And most likely we'd see some monetization into that overhead level. That's where those out of the money calls become in the money. And usually we see some monetization into those overhead levels. And then we have a large gradient up there at 6,700, which obviously matches the all expiry PGEX and COI. Again, opportunity to drive towards that level, not really anticipating it unless we see a large amount of volume intraday. And that's why we monitor our intraday volume metrics as well as our call and put centroids. If they're sloping to the upside, then we have the opportunity for speculation to the upside, and we could drive towards 6,700. Most likely, we'd see some stalling at 66.80 if we get over 66.50. If we reject 66.50, opportunity to short, possibly back down towards the top of the transition levels as well as drunken sailor range. And then if we drop into drunken sailor range and fail the transition area, we'd most likely be short to the bottom of the drunken sailor range. Again, we'll be watching the intraday volume metrics as well as the MTM for us to be indication if there's selling coming into the overall market and put speculation to the downside. All right, so let's move on to the trading view chart. I'll go ahead and expand this. You already see that we're testing that 66.50 this morning. Again, we've tested that for the past few days, multiple times on Thursday, and that's where we rejected. And then 66.25, just a massive confluence of P-trans on full expiry, as well as 0DT transition, as you see here, as well as the top of the drunken sailor range. So again, this would be a key area of failure. Again, that would most likely change our overall thesis and thoughts on supportive type action, at least in the short term. We drop in the drunken sailor range, and this continue to be choppy price action, as we have COTMP here for the full expiry also. So again, that most likely could be a monetization area if we drop back down into it. Again, if we're above 66.50 and we hold that ledge and we see speculation to the upside, 66.70, 66.60, and then 70 would be those areas quickly that we'd probably look for price to drive up towards. So again, everything is in place for us to do that. Again, it'll just be driven by the intraday volume metrics as well as the market trend model. So we'll see how we handle that 66.50 today. All right, so single stocks, let's look at a few of those heading in. Again, we're pretty much in the same boat or same area that we were yesterday. We're extended above P-trans and plus GEX on a lot of these stocks as we had significant moves to the upside. So again, consolidation or pullback in any of these stocks as an opportunity to get involved to our key gamma delta levels. A lot of these stocks remain call dominated. What does that mean? Basically, there's speculation to the upside. There's call speculation below. So again, those will be maintained and supportive unless we see a large erosion in the overall structure, which really not anticipating at all as the structures continue to advance and we see speculation on out in time continue to ramp up on a lot of these stocks. So we'll see what happens after this OPEX. Obviously, it is a large monthly expiry, so where that money gets deployed for the next month, October, and into Q4 will be important, and we have the tools to monitor that. On that note, come join us at gammaedge.us. We'd be happy to have you. Again, click on the newsletter tab, put your email in. You'll be sent a newsletter on the weekend, and it's Beyond the Bell newsletter covers all of our content, our thesis, and how we navigate the SPX option structure. Free courses, Gamma Edge Fast Pass. Again, free education. Sign up for it. Be happy to go through it, and then the School of Options and a couple other trading courses there. And as always, click on the pricing tab. Come join us in the Discord. 14-day free trial. All the tools turn on. Past 2 days, I've had open office hours, allowed members to come in and ask questions. We have an open mic session on Sunday where we interact with members, answer questions live, and record it if they can't be with us. And again, we're on Discord pretty much live every day. Our whole team is trading. We have a couple mechanical strategies, P-trans to PGEX for people that work 9-to-5 jobs. Again, blows away SPX or SPY buy and hold with all of our back testing, which we can show you all the data. And then our forward testing, we're still at a 70% win rate. And I believe yesterday I looked at it, my portfolio was up roughly around 17%. So we're still beating the SPX and SPY just with a mechanical portfolio, no emotion via our overall tools. And just mechanically execution. And we're also rolling out a wheel strategy. We're posting all of our trades on that. If that interests you, come join us. We'll be happy to go over it with all of you, as we are the team and we're in the trenches trading with our members every day. I trade the Qs. I answer a couple questions here, so people throw them in the chat if you want, or individual stocks we can go over. I trade the Qs and NQ. Do you have the data as well, or only SPY? Qs, SPY, yes we do. We do have a large number of traders that trade the NQ, but they usually look at the Qs and SPY. We have both of those. I just don't cover it in my morning plan. Qs are in our web app. I can go over the trading view chart here too. So here's our trading view chart for QQQ this morning, and then here's our levels. P-Trans plus GEX COI is up there at 600. And then P-Trans 594, 0 GEX 594. So we're above all the transition levels, and then PGEX COI up there a little bit higher. And here's Qs for today, call dominated. Sorry about that, it's not running. My internet's been slow. This is not the web app. I think they're doing some work on my local internet. I do have fiber to home, but it's been a little slow today. So there you go. So yeah, 600 PGEX for today. So obviously that would be an upside target you'd be looking for. Any pullback on Qs or call dominated transition area, a little bit wider transition for Qs here, but any pullback to the transition area, opportunity to get involved to the upside. And then we see COTMP and NGEX there at 592. So if we got below that, we'd change our thesis a little bit. You do see COI down here at 585, well below spot price. But PGEX to the upside 600, that'd be an area that I'd be looking for to the upside. So let me know if anybody else wants to go over any other stocks. I'd be happy to punch them in the web app. We can go over them, or we can discuss our thesis, or how we trade. So we're driving pretty significantly to the upside on SPY now, and then testing 6650 here on the SPX, and then IWM's driving to the upside. So we'll see how this plays out today. Obviously, we have our trading plan in place above 6650. We'd be looking for 6670. If we reject 6650, then we most likely will be choppy action from the top of DS within that overall range. 6640 is kind of a key level too that we discussed in our morning game plan. So if you want to know about that level, come join us, and we have extensive commentary about the SPX structure and game plan for today. So. All right, make sure to like and subscribe on YouTube as well as X. You'll be notified when we go live with any content. Share our content. Our community continues to grow online as well as in our Discord. We're happy to answer and chat back and forth on X or as well as YouTube. We're going to be scheduling some weekend sessions where we're going to open it up to the whole community, not just members. So look for that coming up. We're trying to figure out what the best times are for people that are on the West Coast as well as East Coast and across the pond, our neighbors in Europe and other places. So we want to get everybody involved. So that's going to be coming soon. Basically, it'll probably be a Zoom session where it'll be open to anybody. They can come ask questions. We'll go over a topic quickly, and then we'll just have an open time where people can join us and ask questions about GameEdge or any of our tools. And that would be open to non-members as well as members, but anybody across our X or YouTube community. So thanks everybody for joining us. Manage risk today. It could be slightly volatile with OPEX, but we have a structure. It has to be navigated, and we have our plan in place. Everybody make it a great Friday and have a great weekend if we don't talk to you. Thanks. Bye.